Hello, this is Vance, and this is an introduction to the slowhand method for price action trading. My screen name is Vince Virgil. What I wanted to do is to give everyone an overview of what I'm going to be doing over the next little while as far as price action trading is concerned and the slowhand method. This is going to be just a short introduction of, I think, what amounts to the key elements with regard to price action trading, in a series of slides, information that I'm going to cover, as well as some contact information for those of you out there who may be interested in learning more about the method. Now, in the past, I have conducted some classes and so forth, but they've been a little bit haphazard. So what my intention is to do is to, instead of answering people individually, try to put up an overview that can help zero in on what I think are the most important aspects of the slowhand method and price action trading as it pertains to the CL. Hopefully it will give everyone an idea that when I'm doing my videos, they have a understanding of where I'm coming from. And I thought this would be the best way to get to a common language and in the fastest way with regard to the slowhand method for price action. For my trading, I think trading really hits on three areas for myself personally. It's about risk management, and there are some that argue that risk management is trading. Management of risk is important to trading because if you don't have capital, you can't trade, and if you lose your capital, you're out of the game. So risk management in preserving your capital or saving one's capital, maybe that would be the better term to use, is very important about trading. I'm not really going to get into a lot of risk management with this, with the program. My focus is going to be on the price action side of things. Risk management, that's something that for you yourselves to decide based on your account size, based on tolerance for risk. That's more of an individual thing. There are certain parameters that you should follow, but at the same time, that's an individual decision that you have to make as far as how much risk can you assume, how much risk can you take on. Self-management is the psychological side of trading. How you manage yourself when you're in a trade, prior to a trade, how you conduct yourself as a trader. You consider this as a hobby, or is it a profession? Is it something that you have a burning desire to succeed at, or are you just dabbling in it? How you came to decide that trading was the right thing for you. Now, as the last part is of a trading overview is trading the slowhand method. This is what these slides or this program is going to be basically about, going to be a quick overview about the slowhand method. It's impossible for me to cover everything over a series of videos, and I think that likely it'll be a few hours. 5-6 hours of videos should give everyone a pretty brief introduction to the slowhand method. Now, obviously, this takes time. I'm going to edit it as much as possible. I'm going to try to make it as easy as possible, and I'll let you ask some questions if you want. But suffice to say that the focus on this slideshow and the future program is going to be on trading the slowhand method. When I look at the path to profitable trading is to how you view your trading as a business. You construct a personal methodology. Now, I'm talking about the slowhand method for price action, but essentially, once you take it on and once you start trading it yourself, you can call it whatever you like. You can pay homage to the method as the slowhand method. However, it's your methodology. You have to make it your own because you are going to be trading it. And that is really an important aspect of trading. You construct your own ability to be in front of the screen to trade it yourself. We set measurable goals. You set measurable goals for maybe it's so many trades, maybe it's a certain period of time, maybe it's a certain dollar amount that you're trying to achieve, maybe it's you suspend your trading after you're losing 2 trades in a row, whatever that may be. But the goals need to be measurable. It's something that you have to be able to track, that you can base yourself on a daily, weekly, monthly, annual basis. And continued self-evaluation for improvement really just refers to making sure that you're always fresh, like you're learning something every day. If you hope to succeed in the long term, things change. Markets change, politics changes, the world around us changes. You have to be able to look at those changes and internalize them, and from that perspective, improve or to continue to improve. Because if you remain stagnant, you'll probably be setting yourself up for a very difficult time. Identify support and resistance, reading the candlesticks, assessing the trade risk as far as on the chart is concerned, placing the trade, what I mean by dynamic trade management, how you manage a trade while you're in it, trade exit strategies, setting of targets, and when is it time to get out of a trade, maybe as well as how long is it too long, and of course keeping track of those trades. Now, just I use a very simple method of keeping track of my trades. It's not very involved, but you have to decide for yourself what's good for you, what work for you. So this is essentially the slide that I'm going to be covering. The other things that I mentioned briefly, I might touch on as I'm going through some of these subjects or some of these bullet points here. But this is what I'm really going to be focusing on over the course of the next presentations. I'm not doing, as I said, over the next few weeks. I guess maybe the big thing is what is the slow hand method? And so what I look at is from what the slow hand method really is. It's building the chart, is recognizing the context of the market. It's the price action positioning, in other words, the trading part of it, and helping to really to understand how to trade at the hard right edge. And what I mean by the hard right edge is as those bars are developing, how to use that price action so that you can be in the best position to take advantage of where you believe the market is heading, where that market is either on the buy side or on the sell side. And then where to go from here. After you've finished all of that, the things as far as is to continue to work on your personal system of development and to work the process that you've come up with. And so that's down the road. So that's really what I'm going to be covering off. And lastly, this is my contact information. This is a Gmail account. Take it down. If you have any comments on these slides, this little brief presentation, let me know. I'm going to start off with the first presentation this week sometime, and I'll try to break it down. I'm going to try to keep them all down to probably cover the entire program in roughly 6 hours. That's basically what I'm going to be looking at. So the videos, after I come up with them, in maybe 45 minutes to an hour in length, to cover off the main points of what I see as the slow hand method for price action. I'll touch on, as I said, the other points, reference to risk management, self-management, but I'm going to be focusing on the slow hand method for price action. And that's pretty much it. So if you have some interest, you've got this email right here. Send me any comments or any thoughts or suggestions that you may have. I can't promise that I'll return an email to you with regard to that, but I'll keep it into consideration as I'm fleshing out the program. This is Vance. Thanks for listening. Bye for now.